Yeah, good morning, everyone. We had seen yesterday market in the US behaving again in a mixed way, in the sense IT stock or Nasdaq came off and old economy, that is Dow Jones Industrial, move up. Uh, at such S&P 500 uh, has seen some decline. Uh, Even futures are on the other hand, on the other side, that is, Dow was down and the Nasdaq was bit up. All these are happening as today there is a Fed meeting in the evening where the expectation is that the interest rate will be left unchanged. But the expectation is also that from a September meeting there will be a start of a rate cut, and that will continue in all the three balance meeting in the coming year, in the current year, that is CY24. So a rate cycle comment will be quite important in this meeting from the Fed, where the rates are moving from here, how many rate cuts we can see in the coming period. So that is also putting some volatility in the market. Uh, Whereas the Asian market are seeing some positive trend, wherein though the Japanese market are bit correcting, but the other market, that is Hang Seng or China market or Taiwan or Korea market, most of them are positive. So more of a positive reactions, and also we had seen commodity correcting a lot in last few days, but today morning are seeing some bounce back. So that can also support the market. So overall seems market is likely to see some positive trend, but ahead of the event, we may not carry very long at the end. So likely to remain positive, but in a range only. And I'll request technical team to take up from here.
Thank you, sir. Very good morning, all of you. We have seen a very volatile movement yesterday. So we've seen a very volatile move in yesterday's trading session when Nifty took a resistance of 25,000 on the higher side, that is 24,970, and has taken the support of 24,800 on the lower levels. So again, the Nifty is facing a huge resistance at 25,000 levels, but we won't see any big rally once Nifty crosses 25,000 on the higher levels. If that is done, then we can expect a move towards 25,080 to 25,200 levels. Whereas the downside support for Nifty is its previous swing support, that is at 24,770, will act as a very important support zone. 24,770 is broken, then 24,700 will be seen as the next support zone. Talking about Bank Nifty, so Bank Nifty has shown a similar move like Nifty. It has gone higher, touched the high of 51,940, and then again around the closing time, it has retraced approximately 400 500 points from there, and the closing was around 51,500. So talking about Bank Nifty, there's an immediate resistance which Bank Nifty is currently facing, is at 51,800. If that is broken, then we can expect its 20-day moving average, the next resistance, that is 50 to 140, followed by 50 to 400. Whereas the immediate support point for Bank Nifty is currently placed at 51,240, followed by 51,000. Talking about Fin Nifty, it has closed at around 23,365 levels. The upside resistance for Fin Nifty is currently placed at 23,500, followed by 23,600. And the support for this index is currently placed at 23,270, followed by 23,140. Talking about stocks, we have seen a good rally in mid-cap stocks, where PPL Pharma is looking good at the current levels, can be bought for a target of 188 by keeping a strict stop loss of 169.50. Jamna Auto is looking good at current levels for a target of 148 by keeping a strict stop loss of 136. So that's all from my side. I request Neerav to take the call forward.
Yeah, thank you, Ayush. On the derivative front, yeah, see, at this point, 25,000 continues to be a resistance zone, and until that is broken above, we might see the continuation of some selling pressure around this area. We've seen Nifty make a good base around 24,500 to 24,700 zone, and it is likely that Nifty might come down towards those levels, take good support there, and again witness some buying. Overall, the trend continues to be bullish, but from the next couple of days perspective, it can come down a bit. From the stock specific front, we have seen fertilizers do very well yesterday. So as of now, the theme is, for fertilizers, energy companies to do well. So these companies, along with ONGC, IOC, HPBP, they are going to do well because a lot of open interest on the short side has been covered. Now there are some selective longs in some stocks in the fertilizer space like GNFC, Chambal, and UPL as well. And IOC, HPBP have seen long creation, so they can all do well together. So if one concentrates on these sectors, one can make good money in the next couple of days. Yeah, that's it from my side. Like to have the fundamental team to take over, please.
Good morning. Capital Small Finance Bank result has improved due to improvement in NIM and lower slippages. Loan growth was tepid. If we compare with other SFBs, loan book is at 6,000 crores and grew 16% year on year, 4% sequentially. But NIM improved from 3.8% in March to 4.2%. That's why profits came at 30 crores against 28 crores in March quarter. Slippage came down to just 1% versus 3% levels in March quarter. We are positive on Capital SFB. Star Health result is below expectation. Gross written premium grew by 18% year on year. Profits grew by 11%. However, the combined ratio came at 99% versus 98% last year. And expectation was of, in fact, between 97 to 98%. Also, since listing, this is the first time we are seeing that the retail health market share has declined to 31%. Last year it was 32%, and in March quarter it was 33%. That's why we are neutral on the stock in the near term. 360 ONE Wealth Management result has improved due to sustained top line growth and subdued OPEX. Revenue was up 5% sequentially for both the segments, that is Wealth AMC as well as the brokerage segment. Operating expenditure declined by 12% sequentially and was up just 26% year on year. So that led to stronger profit before tax growth of 23% sequentially and 72% year on year. We are positive on 360 ONE. Thank you.
Good morning. Tata Consumer Products Limited results were ahead of expectations. Revenue grew by 16% on a YY basis, which is including the recent acquisitions of Capital Foods and Organic India. While organically, revenue grew by 10%. In terms of volume growth, beverages delivered flat growth where tea volumes were flat, while foods business volumes grew by 10%. International business recorded 10% of growth, and non-branded business has performed well with revenue growth of 33%, where the EBIT margin has expanded by 600 basis points on a YY basis. Overall, operating margins were at 15.3% versus the expectation of 14.6%. Growth business continued to expand its contribution to the overall revenue, where it stands at 29%, but it was marginally below the management expectations of 30%. During the quarter, tea, NourishCo, and Starbucks, the beverages segment, had a weak performance due to severe heat wave. Also, the management had acknowledged that it has delayed on the implementation of the tactical pricing actions, where it had an impact in the quarter. In terms of distribution strategy, the company has aimed at exploring the opportunities in the pharmacy channels and the food service. On the same, it has initiated pilot projects in the 6 cities for pharmacy channels and the 2 cities for food service. Also, if you look at the bottom line performance, the PAT has degrown by 14%. This was largely due to 3 things. Firstly, the amortization charge on the recent acquisitions. Secondly, the rise in interest cost, which was on account of the breach financing of rupees 3,000 crore. And lastly, from the advertising and promotional expenses, which has gone up up to 7.8% of the sales, which were at around 7% in FY24. We had recommended the stock as a pick for the month of February with 20% upside at 1150 levels. Currently, the stock is trading at 1195 levels and provides a good opportunity with the long-term investment. The stock is available at 46 times to FY26 earnings. Navin Fluorine International Limited posted the results. Results were broadly in line with expectations. Revenue grew by 6.6% on a YY basis. It has seen the continued weakness in the agrochemicals segment, and the specialty chemicals segment has seen the degrowth of 30%. This was on account of inventory rationalization by the customers and some order deferrals. The HPP segment grew by 66% on a YY basis. This was on account of improved pricing and the volume performance. The CDMO segment moderated by 13%, and the management expects gradual recovery in the agrochemicals from second half of FY25. The EBITDA margin reported at 19.2% versus the expectation of 19%. The company has seen the sequential improvement in the margins since Q3 FY24, and the management has guided for the EBITDA margin of 24 to 25% range based on the current market dynamics. And the key focus would be on the higher capacity utilization, cost management. Also, the high value business will contribute to their margins in the future. We remain neutral on the stock due to near-term challenges on the order deferrals, where it is currently trading at 39 times to FY26 earnings. Dixon Technologies Limited, the results were above expectations. Revenue grew by 100% on a YY basis. This is mainly on account of the mobile and EMS segment, where it has started the production of mobile segment that has delivered growth of 190% on a YY basis with operating margin of 3.3%. Home appliances revenue grew by 18% on a YY basis. Operating margin reported at 3.8% versus expectation of 3.9%. There was a marginal reduction due to the higher staff expenses and the other expenses. The capex as guided for the year in the range of rupees 500 to 600 crore. The stock is trading at a PE of 78 times to FY26 EPS, and one can accumulate based on the long-term investment. Thank you.
Yeah, good morning. Yesterday, Zaggle Prepaid Ocean Services reported numbers, and the numbers have improved. The revenue from operation came in at 252 crores, which is a jump of 113% on a year-on-year basis. So, company saw good credit card volume growth during the quarter, and also saw increased traction in its one of the products, Zoyer, which is an accounts payable product. Gross margins of the company also saw a 500 bips Y-on-Y jump at 56.2%. That was on the back of change in the product mix of the company. So, company has indicated that they had given earlier guidance for FY25 for 45 to 55% of revenue growth, and they have indicated that they would be revising it upwards in the next quarter. So, first half, that is H1 is a seasonally slow quarter for the company. Still, it gave very good quarter one numbers. H2 would be still ahead in terms of growth. So, company is expecting the similar kind of momentum in the next quarter, and is looking to double the revenues between FY24 and 26. And it is also looking for organic or inorganic growth in the US markets as well. On a TTM basis, the stock is trading at 70 times, and given the high expected growth expected in the revenues going forward, we have a positive outlook on the company. One can buy and accumulate the stock with a long-term for long-term benefit. Apart from that, secondly, India Mart Intermesh Limited reported results above expectations, wherein the revenues grew 17% Y on Y. The EBITDA margin came in at 36% during the quarter, and last quarter they were 28%. The stock is trading at 49 times 1 year forward expected earnings, and we are having positive outlook about the company. That's all from me. Thank you.
Yeah, apart from this, Sterlite Technology reported numbers, and number has shown some marginal improvement quarter on quarter. Out of the three segments, the product revenue came bit higher than last quarter, though year on year it continued to struggle. Last year, company had done revenue of around 1,112. Against this, right now they are doing in the current year of 810. This is the segment which has very high margin of around 20% in a normal course of business. But currently they are struggling and are doing around 10% margin in this. So quarter on quarter, we had seen some improvement, and management has indicated that this business is likely to come back, and mostly in the H2 it should come back. That poor performance is on account of low demand in the US and over stocking of the material in the US vendors. So that is having an impact on the prices and volume both. So this is likely to improve in the second half. Another business, that is a service business, which is wherein there also the performance right now is sluggish, mainly because of the lower ordering. Here again, BharatNet orders are in pipeline and are expected to be awarded in coming period. So post that, that can push up the revenue and profitability in this segment also. And the third business, that is a digital business, is continuously incurring losses. In this quarter, they incurred around 17 crore EBIT loss, which is similar to last quarter. So in all, performance was marginally improved quarter on quarter, year on year very poor. But likely to see gradual improvement, and second half, if the demand come back for the product, then can see good growth. And also with the winning of the BharatNet orders in the coming period, they can scale up even the service business as well. So outlook from here looks positive, but it may take some time. If we see the normalized results, that is wherein they can utilize their capacity to 70% and do around 20% margin, they can do comparatively better performance. With at the peak of their reasonable prices, they can do EPS of around 11 rupees. The current prices are 145. So share is trading at around 13 times their peak earning. The reasonable earning, which can come maybe in 2026 or FY26 or maybe FY27. So looking at that, one can hold on the stock or accumulate gradually over a period of time. So now request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, commodities have opened gap up, and we recommend to buy on dips. Gold, one can initiate a buy around 69 350 to 300 levels, and silver we are expecting to prices to hold on the 63,000 83,000 mark. So one should buy on dip around 83,000 with a stop loss of 80 to 200. On upside, we are eyeing for 84,000, 84,500, whereby profit taking is advisable. So one should book profit around 84,500. And in metals, copper, one should buy around 797, 795. 795 is the important level. If prices are sustaining above 795, then we expect prices to test again 810 on upside. Zinc also we recommend to buy around 252 with a stop loss of 250. On upside again it can test 255, 56. So all in all, buy on dips is the view, and crude oil one should buy around 63.30 with a stop loss of 60 to 50. On upside again it can test 6400 to 6450, whereby again profit taking is recommended. For trading purpose one can also sell around 6450. And natural gas one should buy around 175, 176 and maintain a stop loss of 165. On upside it is expected to test 185, 190. So watch out for the same. And that's it from us. Thank you very much.